Today, we are looking at the shockwave that just hit the legal technology market. For those catching up, on Friday, January the 30th, so last Friday, Anthropic quietly pushed an update that's fundamentally changed the landscape for a lot of organizations. They didn't just update their model, but they instead open sourced the workflow that underpins a lot of what Claude Cowork can do. So alongside the new Cowork desktop app, Anthropic released 11 specialized plugin packs, including a fully functional legal plugin capable of things like NDA triage, compliance checking, contract review, and things like that right out of the box. Now, the market reaction was a little bit delayed, but I'm sure it hasn't escaped anyone's notice. It's been quite a violent reaction. So by Tuesday, on the 3rd of February, this week, more than $285 billion was wiped off the market cap of traditional software and data giants like Thomson Reuters, Wolters Kluwer, in pretty much a single trading session. So the message from Anthropic is relatively clear that the plumbing of legal work, so the integrations, the basic reasoning, the document fetching, is no longer a product that you buy. It's simply a feature of a model that you're probably already using. So where does that leave dedicated legal AI startups and established vendors as well? Is this the end of the vertical AI company, or does it clear the deck for the real high value work to begin for those organizations? So to discuss what all this means for the broader legal tech industry, I, of course, had to make some time to chat to Jake Jones, co-founder of Flank. So Jake, let's get started. Let's get really specific with the timeline here. We saw Claude 4 launch last May 2025, and then Opus 4.5 in November of the same year. This release feels different, I think it's fair to say. Is this the moment where agentic AI moves on from being a cool demo to a slightly more standard utility for corporate teams?
Yeah, I want to answer a different question. And in doing so, I think better answer your question. So you're asking, is this release different from the Opus 4.5, Sonnet, all the other stuff that we're seeing from Anthropic? The answer is yes. And okay, so a different question is, what kind of roadmaps are we seeing from the Frontier Labs? Because what we're observing is a shift from primarily focusing on model development. So when I talk about model development, I mean, if we look at OpenAI, you've got the GPT series of models from 1 through 5, and then you've got the minor releases. So 3.5 being a major minor release, all the way to 5.2, 5.3, wherever we are now, 5.2. And this was optically where the Frontier Labs, so Anthropic, OpenAI, let's include Google in there, Meta, everyone else. This is where they were putting most of their spend. And again, optically, where they were looking for most of their revenues. Now, this release of the 11 legal plugins, I think we said 11, add to Cowork, to me is not really the headline. It's a bit of a lagging indicator of where Anthropic and these other Frontier Labs are moving with their business models. So let's zoom out and look at that, right? OpenAI began to release ChatGPT Enterprise, I think, deep into 2024, and began to find traction with ChatGPT Enterprise through 2025, to the extent that they began to actually compete a little bit with their partner and their investor, Microsoft, co-owner in one way, Microsoft. Today, as in, what is the date today? The 5th of February. You won't be watching this on the 5th of February as we've got to edit and everything else. Today, the 5th of February, OpenAI just announced this new platform called Frontier. And if you look at the announcement from OpenAI and you look at what it actually is, it appears to be an operating system. It appears to be competing with something like MS365 and the broader kind of Windows, if we're still using that term, Windows product ecosystem. So Anthropic have Cowork, Google have Google Workspace, Microsoft have 365, OpenAI have Frontier. This is a new era of the kind of operating system, platform, browser war. And the Frontier Labs are uniquely positioned to capitalize upon this and to enter this market and to win, because they own the means of production. So they are building the models that are going to power all of the software and agents and whatever of the coming years. So they're in a position where they can very quickly bundle up a lot of different apps into an operating system, much like we've seen from Microsoft over the years. So this release, I think, needs to be seen as entirely distinct from a release of a foundation model. It's not a model they've released. let's be really clear. Anthropic have released a new set of apps into their operating system, which is Anthropic Cowork. Now, what that means, we'll probably talk about a little bit more over the next half hour to an hour. But I think that distinction is really critical.
Yeah, and it's a helpful background. I mean, with that in mind, let's stay on topic. I mean, what this move into kind of this operating system space for these frontier labs. I mean, let's look at Claude Cowork, for example, Anthropic Cowork. What problem is that actually solving, and how does that ultimately differ from other vendors on the market? Because you could look at the legal plugins that have been shipped for Cowork and question the potential impact that something like that may have on specialized legal AI startups that lean on Anthropic's models, for example, for its capabilities. Like, what problem is it solving, and ultimately, like, how does it differ from what is currently available? And I suppose, what angle and wedge are they looking at to try and enter the market as comprehensively as people believe they are?
It's an almighty question. There's so much to it. There's so much to it. When ChatGPT was released at the end of 2022, start of 2023, and Google Gemini models were released in early 2024, late 2023, whenever they moved from Bard, once it became clear that there was meaningful material efficiency gains to be had in enterprises from these models, and once there was a mandate from the C-suite to their different functions to procure technology, all of these teams wanted to use ChatGPT or Gemini in their day-to-day work. All of these teams wanted to. And yet, it's not that straightforward. When you're working in an enterprise, when you're working in any kind of organization, really, you're dealing with sensitive data, you're dealing with demands for single sign-on, you're dealing with a whole load of GDPR constraints, CCPA, whatever. You cannot just go and take ChatGPT and start using that as your new tool. Let's be specific and talk about legal departments. There was no way for legal departments in 2023, early 2023, to take a contract and dump it into ChatGPT and get it summarized without breaching some kind of data privacy regulation law. So the first wave of legal AI that came out it wasn't solving a problem in the kind of traditional jobs to be done competing against luck framework where there's one specific vertical thin slice wedge hair on fire problem, whatever kind of startup-y language you want to use, tech language you want to use, and that these vendors are coming along and solving that and measuring what the cost is and providing the ROI and whatever. Instead, the sales pitch, say it quietly, but this is the truth. The sales pitch was, you can't use ChatGPT, so use insert name of vendor here. And these legal teams, I'd love to hear from legal teams who bought in 2023 who weren't doing it for this reason. And there are some, I know of them, but I think they're the minority. These legal teams were procuring these vendor products, these early legal AI, legal intelligence platforms, in lieu of being able to use the foundation model provider's interface, which is why I've always perceived this period of the AIification of SaaS over the last 2.5 years being a transition period. And the transition that I've observed is that the cost of building SaaS and conventional SaaS functionality has been plummeting. And everyone's been talking about this, and we've seen the vibe coded apps and everything else online. And they're not just vibe coding SaaS, they're vibe coding AI SaaS. So it's a better, but it's real, it's happening. The cost is going so low, it's dropping to, let's call it zero. I think we're already approaching at that point. Because of the fact that the cost of SaaS is coming down to such an extent, the new era of enterprise software is, by its nature, needs to be so platform rich to have any kind of intrinsic value. It needs to be operating on the level of like an operating system, of a browser, it needs to be the execution platform. And the individual applications are diminishing in value enormously. And therefore, the initial problem that many vendors set out to solve, which was, okay, how do I get these people to use ChatGPT for law? And ChatGPT for law was even a tagline used for Spellbook. How do I empower in-house teams to use ChatGPT for law? And they put a thin wrapper on it and everything else, and it's developed from there. But that has now, that problem is now being solved by the foundation model providers, and inevitably it was always going to be. So I said that I always perceive this as a transition period. And the transition that we're seeing is a world in which people buy individual apps, like individual SaaS apps, and the end user, that the buyer of the software is actually using that software, to those SaaS apps being a commodity and in one way or another not being worth anything anymore. And then the problem being solved onto the level of the platform. What problem are they trying to solve? And I think you can only answer that question by understanding the constraints within which legal teams were buying software 2 years ago. Now, legal teams wanted to use the foundation models. They wanted to use ChatGPT. They wanted to use Gemini. They couldn't for a whole range of reasons. So this was leapt upon by legal AI vendors. You can't use ChatGPT. You can use our product. It's secure. It gives the right citations. We have zero data retention policies, whatever it was. So now what problem are those vendors? And I won't name them, but what are they solving today? I think the category has kind of dominated the problem space. If you follow. So what I mean by that is that the category of a legal intelligence platform that is the assistant for in-house lawyers that is what people buy. It's less that someone is articulating the problem really, really well, or someone is solving one specific problem really, really well. And I believe that is also why many of these legal intelligence platforms are now under a fair bit of threat by the Claude Coworks, the Microsoft Copilots, and the OpenAI Frontiers of the world. Because these companies are now coming in and offering general purpose solutions that also have vertical tooling within it. So Cowork is a general purpose enterprise execution layer that has 11 legal tools today and probably 100 in 6 to 12 months. And if you're an enterprise and let's say you're the procurement team or the digital team or the CFO, being able to consolidate onto a single platform, as many enterprises have done with 365, is an enormous opportunity and a lot safer than having to manage hundreds or thousands of vendors. So where do the current crop of legal AI vendors fit into that? My sense is that there are certain vendors like Wexler, who are a litigation-focused AI startup, who are hyper-verticalized, who are going to continue to do well. And then there are vendors like Harvey who have doubled down on the consultative approach, both to their sales and also their implementation. They do very deep, bespoke implementations that's needed at enterprise, and that's not going to change. So there are certain people who are developing different kinds of moats, but the legal AI vendors who are just building legal intelligence platforms, spending tons of money on brand marketing and the experience around it, believing experience will become a moat, I think it's for a rude awakening.
It certainly feels like there's some public statements from senior leadership within some of those vendors that seems like they are rushing to their own defense in some ways, which I think is quite an interesting tone to strike. It's almost as if to say, everything's fine, not to worry, all good. I think those sorts of things, I think it'd be naive to assume that they didn't know that that was happening in some way, shape or form, given their relationships with the Frontier Labs. But it's still interesting to see how, certain organizations are looking to reassure their communities, their markets and things, and say, hey, you might think XYZ, but actually the reality is ABC, and maybe defining the narrative to their own benefit, as SaaS companies have done for decades, of course, when disruptive moves hit the market.
But I think that's a really critical point. What's interesting, I've observed some of these industry leaders actually from companies who have they're not a great threat at all, and they're getting a little bit defensive, and that's intriguing for me. But I think this critical point is that if the cost of SaaS, building SaaS, is coming down to such an extent, it becomes easier and easier and easier to monopolize with a platform. And I think many predicted this years ago, that AI, rather than opening up loads of opportunities for smaller fish to build, that OpenAI would further centralize the resources, the value, let's say, the value, because these foundation models are so expensive to build. So expensive to build, and they're getting more and more expensive to build because they require more and more pre-training and more inference compute. So that is a moat that the foundation model providers have that no one else can touch. And therefore, it has felt to me for some time like if a foundation model frontier lab decided, okay, I want to go and win legal, why would they not and why could they not? From a software perspective, because software inherently, with exceptions, doesn't have so many moats. Like you've got network effects, you've got experience, you've got data and everything else, but the difference in quality and value that you can deliver with foundation models now versus pre-AI is so enormous. And you're relying upon the foundation model providers to deliver your service. One could argue you were always reliant upon the cloud hosting providers, but this feels different because the core of the value that you're delivering is the foundation model and then stopping the foundation model provider from entering that market. So I think what I anticipate and what I think potentially we're seeing the beginning of, and we'll talk about the markets a little bit later, but I'm anticipating actually a real consolidation. I think it's going to be a lot easier for MS365 to add an accounting tool to their stack and a legal tool to their stack and all these different things. And it's been said by the leaders of some of these labs, I think it's been said by both Dario Amadei and Sam Altman that we're not going to build a tool for everything. We're not going to build an enterprise solution for everything. So like we want you guys to come along and build. But legal's too big, too exciting, too fast growing market to ignore. So you're stuck in this kind of trap as a startup where if you enter a cool enough, sexy enough market that's big enough, the frontier lab's going to eat you for breakfast. That's my sense. And we can talk another time or later about what therefore that means for Flank, because this isn't waving the white flag or whatever. But we certainly have avoided in the last 2 years building just vanilla assistive technology that can easily be gobbled up by a frontier lab.
And it's, yeah, like you say, it's extremely interesting to see that attitude from the frontier lab still saying like, yes, come on and build. And I mean, what's your sense? I have my views on it, but what's your sense as to why legal is such an attractive market? Because my take on it is that it's probably the discipline in the profession that's most overdue something of a revolution in terms of how stuff is done, how revenue is recognized, how work is carried out, as well as the expectations, certainly from an in-house side, not necessarily speaking about law firms, but from an in-house perspective, the expectations that are placed on them as a group of legal professionals for a very commercial organization where expectations and indeed volumes are growing exponentially, as is the expectation of growth. But realistically, the focus is on, continue to support us in the way that we want you to and meet the SLAs that we set you, but I'll be damned if you're getting any more headcount type thing. So it almost feels like that's the driver behind all of this, is that they're probably one of the most chronically under-resourced, maybe because of the traditional ways of approaching the challenges or the jobs that they need to do. But what's your sense as to why legal over? Because there's a whole lot of deeply verticalized opportunities that these frontier labs could pursue, but it does seem like these, legal compliance and so on and so forth tend to be the ones that are the ones they're going after.
I could probably give 10 different reasons. I think there are many reasons. I think legal is an extremely compelling market for many, many, many reasons. But I'll pick two that I think are particularly relevant for this discussion. The first being that many aspects of legal are a kind of form of translation, translating a particular set of provisions into a particular house style and language, then translating that back into something understandable by the counterparty. And there are these kind of acts of translation that are, or maybe that's not a great analogy, maybe these ways of leveraging language in order to define rules that's also probabilistic, that is innately, or has for a very long time felt innately human. It's felt impossible for like a binary system, like a digital system, to really get to grips with it. And we saw that with the likes of Kira and Robin and these other technology companies that tried to tackle contract review and contract analysis pre-large language models, pre the transformer architecture, or in the early days of it. You couldn't really make a meaningful dent. And you had to be so hyper-specific on the training data. It had to be so contextually relevant to really your organization. I think in the case of Kira, you had to provide it with like your huge libraries of precedent. And in most cases, it still didn't make a dent. So I think with the release of GPT 3.5 and beyond, the why now got answered. So many had tried, many organizations, large and small, had tried to automate some of the legal workflows for generations, really. Maybe that's an exaggeration, decades for sure. The digitization of law was like written about in the late 90s, early noughties, 20, 25 years. So many had tried prior to the transformer architecture, and then there was this unlock. So it felt like a buildup of opportunity that suddenly was unlocked. That's one reason. It maybe can sound like a weak reason, but another reason, and the second one I want to talk about, is how law firms buy software, why they buy software, and what they do with the software. And therefore, why we're seeing the momentum we've seen from Harvey and Legora. So very simply, and I'm reducing this a little bit as well, but law firms have their brand. Law firms have their brand. That is their largest, most important facet, their brand. And I'm sure I'm missing other things that are super important, but at least brand is incredibly important. The trust, the relationships, the name. Yeah, Bird and Bird, Alan Overy, or A&O Sherman. Like,
they carry weight.
They carry weight. And you're giving that law firm the responsibility to ensure that you're not getting sued. And in many cases, shifting liability over to them as well. But brand is so critical. And with the wave of AI, it just became a new way for law firms to signal we're ahead and you can trust us more than you can trust our competitors. So Harvey, I guess this is a different problem that's been solved. And Harvey did it incredibly well at capturing that by saying, we can give you an edge over your competition and it will enable you to do more work faster to a higher quality and whatever else. But really, you're signaling to the market that you are ahead of the competition. You're moving better than the competition. So if A&O Shearman, forgive me, I'm going to not remember who has procured which of the two big law firm AI players, but if A&O Shearman procure Harvey, then their neighbor is looking and going, I need AI too. And because Legora were able to build a very strong beachhead by doing the same thing in Sweden and through Europe, they built enough momentum that once they entered America, and they did it very, very well, once they entered America, they became the default second option. So the law firm...
If not Harvey, then yes.
If not Harvey, then Legora. So maybe if you're looking to be a little bit alternative, maybe this was how it initially felt. Law firms were not necessarily procuring AI in order to become more efficient. That doesn't mean they weren't procuring AI to become more efficient, but they weren't necessarily primarily procuring that AI to become more efficient. There's a reason why Harvey and Legora, with every new customer they closed, did this really beautiful marketing campaign saying, we're now working with, and they have selected us in order to. That is worth its weight in gold. Legora, with their marketing chops and their distribution network, them posting about that with the massive reach that they have, when they are one of the hot companies in the world right now, and saying, we are working with insert name of law firm here, is a massive marketing opportunity for your law firm.
Yeah.
So that does not mean that this software isn't adopted. It doesn't mean it's not useful. It doesn't mean it's not efficient. It lead to efficiency gains and everything else. But for sure, it's primarily procured for this marketing purpose. And that means that once you have 5 or 10 or 20 of the AmLaw 100, all the others have to buy it because otherwise they're going to be left behind. So then suddenly it becomes a race between Harvey and Legora to win the AmLaw 100 and to who's going to get who. And then all of that's gone. Because of this, it means there's massive perceived momentum in the legal space because they're willing to spend no matter how well the product actually achieves the ultimate goal that it's setting out to achieve value prop wise. It's still valuable.
Yeah. And those are sort of, second, third, fourth order benefits, I suppose, of arguably first order benefits, like compared to the real kind of change that it can theoretically bring about. But still a lot of this stuff, and I'm including, Claude, Legal Cowork plugins that were launched last week in this, is that it's still very heavily on the onus of you drive it, you tell it what to do. And it's still just, I hesitate to say it sounding derogatory, but it's not intended that way. It's still an assistive technology. It's not doing the work. It's still very much maintains the bottlenecks of law firms and in-house legal departments up and down the land. No matter what they're using, they still have to be the ones to get the most out of it. And I think there's a growing sense of like portal fatigue in some ways, which reinforces your point about the consolidation into these all-encompassing operating systems that are underpinned by the models and the labs, with these deep verticalization for the use cases that warrant it. And like you say, there's no limit to what those verticalizations could be. I mean, when you see these frontier labs making these sorts of moves, and as you've rightly pointed out, it can go as far as they want it to go fundamentally because they hold the keys to the kingdom. What is the knock-on effect? We've mentioned briefly Legora and Harvey, and it's clear that there is an element of crossover now with the offering. Without casting aspersions on how much of a crossover there is a Venn diagram where those two things now touch where they didn't before. What is the knock-on effect for not just the companies themselves, but also we've seen, as I mentioned in the intro, massive amounts of valuations wiped off established big organizations in both SaaS and big data and everything else as a result of this announcement, seemingly. Why is that? Like what's happening there in your view? Because there's been a lot of misinformed takes, I feel, about people picking the wrong signal and saying, this is what this means. And be like, what's your take on that, Jake?
Yeah, so there was I think officially a correction in the public market stocks that were kind of legal knowledge, legal SaaS or adjacent. And I think the average was kind of 20%, and then it kind of softened over the next 48 hours down to kind of 15%, like a pullback rather than anything verging on any kind of crash would be my sense. Before I even give an opinion on it, I'd also like to put it into some kind of context, which is these were richly valued stocks. So let's just take Thomson Reuters. Thomson Reuters, I'm not going to be perfect on my numbers here, but Thomson Reuters, I believe their trailing price over earnings, was over 30 for sure. Forward price over earnings was kind of high 20s because they're not growing rapidly. They're a solid, robust company with good margins, but they're not kind of a company they're not doubling year over year, right? In their revenue, they're not improving their gross margins year over year, quarter over quarter. And this is a richly valued company considering the rate of growth. So priced into that has to be some kind of narrative around how AI will be able to be leveraged by someone like Thomson Reuters in order to warrant that valuation. And as soon as you see a frontier lab entering the space as a competitor, it challenges that narrative. The mind of the investment analyst is, it looked like Thomson Reuters had this huge TAM that they could tackle by leveraging AI and AI models and maybe even train their own models. And either they moved too slowly or we misread this. But now this TAM has someone else competing in it. And if Anthropic are doing it, OpenAI will do it, and Google will do it, and all the other model providers will almost certainly do it or can. And suddenly a market that looked to be a monopoly or a duopoly or whatever it might be now begins to look like a pretty red ocean. Not definitely. If it was definite, then we'd see the price over earnings drop to kind of 10x. We'd see a halving of the valuation of these companies rather than just the kind of correction that we've seen. What do I think of it? I think it's the price has shifted correctly. Now the opportunity of AI is being priced much more conservatively with someone like Thomson Reuters because it's understood that actually they don't hold the keys to the kingdom. They can be competed with and threatened, and all of the opportunities that were priced in ahead of them are open to a much wider range of enterprises than just Thomson Reuters and Wolters Kluwer and whoever else. So I don't think it's panic. I just think it's a fair repricing. And it's within the context of a broader pullback of software stocks, which isn't being talked about. We've seen Microsoft in their earnings, I think they triple beat on that. They beat on the top and bottom lines and they beat on their guidance. And yet there was a pretty significant pullback from Microsoft stock after their earnings due to reading the small print, seeing that a huge portion of their earnings is coming from OpenAI. So at Microsoft, who once had a better credit rating than the US government because how diversified and solid their earnings were, and how strong their margins were now becoming overly reliant upon a frontier lab. This triggered fear through the software market, and it just, every new release of like Cowork and OpenAI Frontier and all these other like new ways of thinking about the enterprise operating system, the enterprise execution layer, as I keep saying, these just shift the narrative and look competitive to the status quo. So the status quo, these companies we took for granted for so many years, it's not that then they become less valuable per se, and they do. It's not, but it's the,
I mean, objectively they do.
Objectively they do, but it's just that like the projection of how rapidly and enormously these organizations can grow is just held back a little bit. It's still aggressive. Microsoft is still at 20x forward price over earnings. That's still pretty aggressive. I mean, it's cheap for Microsoft. Go and buy Microsoft. That's my financial advice. I'm not a financial advisor, but it's at a price.
You're going to have to put a disclaimer across the bottom here.
It's like 400 now. You should probably buy Microsoft, right? Like there's always a little bit of it always goes a little bit too far, right? But we're seeing this for all software stocks. We're seeing it for SAP. We're seeing it for Oracle. We're seeing it for Salesforce. We're seeing it for Adobe. We're seeing it for probably for people at Figma. And you referred to it all the way in the opening as this SaaS massacre and software massacre, SaaS massacre. And I think it is because SaaS is being reappraised today the way that network or cable television, let's say cable television, was being appraised when streaming came along. It's not like overnight people stopped watching cable TV, but it did change the narrative. You did have to suddenly look at cable and go, well, are you going to use this streaming thing? What might this streaming thing do? And what does that mean for cable? And whenever there's a question mark, naturally the markets are pretty efficient at pricing in uncertainty. So pretty rapidly, the price over earnings is going to contract and you're going to see a dip in the valuation of a company.
I had a question here. So looking at the charts this week, I don't mean the top 40, I mean the financial markets, of course. It's quite easy to be alarmist. And of course, there's this ongoing talk about AI bubbles and so on and so forth. But the reality, if you look 12 months out, does this quote unquote crash, because I don't really believe it is a crash, does it actually make or apply any sort of renewed vigor or kind of eliminate any inertia that might be ongoing for taking it back to legal teams, for example, GCs in enterprises and everything like that, to actually kind of now mandate action around having an AI strategy? Because there's now very little excuse to not have one, or at least be like employing, because previously you could claim budget, there's certain legal tech vendors and legal AI vendors in particular who will charge you through the nose for what is now something that you could feasibly get as a free add-on to a standard, Claude subscription for your immediate team or your wider enterprise. So the excuse of not employing something has kind of evaporated. I mean, 12 months out from now, you'd assume that the, let's say, buying cycle for people looking to procure legal technology and legal AI specifically is going to have contracted massively, surely.
So one of the closing points you made in that question, one of the questions you raised towards the end there was around how legal teams now should be considering their AI strategy and whether they're under more or less pressure to be procuring AI, what they should do about that. I am of the mind that an in-house legal team can chill, honestly. I'm of the mind that actually there's a lot of work being done by a lot of really smart people, including law firms, who are going to improve the quality of life for in-house legal teams, and the in-house legal teams will experience that as a byproduct of the leveling up of the enterprise ecosystem, the enterprise software stack, in spite of them paying no attention to legal AI software. I believe if you're a legal AI team, an in-house legal team at Ford, do you want to be more efficient? Yes. Are you a bottleneck in places in your organization? Potentially. Do you need to procure AI today to fix that? No. AI is not a software product or a feature or a flash in the pan. AI is imbuing static binary technology with intelligence. And this can apply everywhere through the entire enterprise. Everything that you touch, be it Microsoft Word, be it your email, be it your HR management system, will have more and more AI powering it in the next month, 6 months, and 2 years in a way that will materially improve your ability to do your job, even if you don't procure any, let's call it legal specific AI. And in a space like legal, you're going to find that the Microsoft 365 suite, which almost every enterprise is on, Excel and MS Word and all of these tools, Outlook, they're going to have more and more tools and functionality that have the flavor of legal to them, whether they're explicitly vertical legal tools or whether they're just something that clearly is going to help legal more than it's going to help other teams. And how can I say that with so much conviction? Because MS 365 is ultimately, in one way or another, competing with Anthropic Cowork. At least Microsoft Copilot is competing with Anthropic Cowork and OpenAI Frontier and. So Microsoft is going to be forced to respond in kind to Anthropic delivering 11 tools for legal and OpenAI and. You know, we're going to keep saying that. So a legal team, just by sitting there patiently, is going to get everything they need, probably going to get everything they need. And their external counsel is going to improve. Legora are helping with that significantly. And Harvey, I believe as well too. Harvey, I really love the strategy of kind of the consultative approach and for deployed work and building these bespoke workflows. I think if you have one crazy bottleneck, bringing in a team like Harvey or bringing in a team like Palantir or bringing in a team like Flank to identify and automate that one hyper challenging bottleneck, and then maybe building an execution layer around it is certainly sensible if you want to do that, for sure. And it will pay for itself back, no question. If you have 100 documents that you need to have certain data extracted from every single day, Harvey can build you that, and they will, and it will be great, and it will probably pay for itself. If you have 5 documents you need reviewed every single day to a really high level and you need to make sure you're kept in the loop, but that you're just checking the output, that you're not having to do that work yourself, like Flank can automate that for you. And if you need to get data from all of this and you need a hyper-personalized dashboard to be able to prove to the C-suite that you're improving your speed and everything else, Palantir will build that for you, or one of the other aforementioned providers will. And your external counsel will get better, because let's just take the Legora portal just as one case in point. Like Legora, yes, the primary reason why people are procuring Legora was probably for marketing purposes, law firms. But Legora is a good product. It works really well. It uses great foundation models and they're a great team and they've got loads and loads of money. So ultimately,
always helps.
Always helps. So ultimately that product will add value. Might add 1% of value, might add 50%, might add 500%, but that value will probably increase over time. And the law firms who are better with their change management and their hiring and their internal marketing of the Legora app will undoubtedly begin to deliver a better service and use that as a competing differentiator above and beyond just the marketing hype. And that means if you're sitting and you're that legal department for Ford, then you're going to get, your external counsel will get better. And the interface to your external counsel is now a portal that Legora have built. That's better. It's just like your life is going to get better. There's loads of bad things about AI, and that's a different podcast, a different whatever this is. But LinkedIn Live, I don't know what it is. That's a different something. But purely looking from value add of AI to in-house legal teams, sit down, do nothing is a valid strategy. It's not a wait and see. It's to sit down and do nothing and observe where the new features and new execution layer opportunities and observe the improvement in your external counsel and enjoy it and factor that into how you hire. Because if you do have all of these new tools available to you passively, you've not had to procure them, they just exist. What kind of profile of lawyer is going to be better or worse at leveraging this? And what kind of profile of non-lawyer in your team is going to be a useful addition to help structure all of this? And I think to a guy I work with, one of our very, very early design partners who is just brilliant at structuring the legal department service as a product. And that's how he kind of thinks about it. And the legal ops that he brings into his legal team makes them way more efficient. And they're using some software, they're using Flank, but most of it is just the ops and using what is available through existing tools, even non-legal specific tools like make.com and Front and all these other tools. So it's a super long answer to your question, but
It was a super long question.
So yeah, it was a pretty multifaceted question. And there was a really interesting thing you opened with. So you opened that question with this idea of like an AI bubble, an AI crash. And
yes,
there is an AI bubble, and all of the frontier lab leaders say there's an AI bubble. And yet when many people hear there's an AI bubble, I observe in the conversations I have and the LinkedIn posts I see that is misinterpreted by many people as meaning AI and large language models, that their potential is overhyped and overpriced. The AI bubble is sitting way, way, way downstream of the large language models. So I just want to paint kind of the supply chain in like really broad brushstrokes in just 20 seconds. So I can like zoom in on where the actual bubble may. You have people at ASML building these huge lithography machines, and you have photonics, and you have quantum timing machines, and you have liquid cooling from companies like Vertiv, and you have then your Nebiuses who are building data centers and bringing in NVIDIA chips. And on the NVIDIA chip, you've got high bandwidth memory from Micron or Hynix like put onto it, and you have it packaged by, I believe, someone like Cadence Design Systems. And you have this wild supply chain in order to get enough compute for these large language models to train them. And these data centers are in such high demand that they're all sold out. They're all sold out, all of them. There's not enough supply. I think I saw Qualcomm just got hit because there's a DRAM shortage, and it's not super AI centric, but there was a DRAM shortage. It meant they couldn't fulfill the demand. So there's not enough supply. There's a bottleneck, left, right, and center. High bandwidth memory is one of the biggest bottlenecks in the supply chain, but there's no bubble there. There's no bubble. If anything, that part of the market, part of the supply chain is underpriced. You've got Micron trading at like 12 times forward price over earnings, even though they've doubled in the last 12 months. And then you have the frontier labs that are leveraging these data centers in order to train their models. So Jensen, the CEO of NVIDIA, describes the data centers composed of NVIDIA GPUs as being one giant supercomputer a mile wide or whatever. He said something really grand and epic sounding.
Yes.
And these are then leveraged by Sam Altman and Dario Amodei and Demis and all these crazy smart people to train large language models and to run the large language models and all the inference that's required. So that the time when you put a request into the large language model and it's got to go away and think and do something, right? Where's that compute coming from as well? There is not enough compute. It's throttled. There's a much greater demand than there is supply of compute. And this is why we see what appear to be circular financing deals, because NVIDIA have to give Nebius the money to be able to build the data center on their behalf. And therefore they invest loads in Nebius, or they partner with CoreWeave or whatever. And what's really happening is that all of these people, the Jensens of the world, the Microns of the world, the C, by the way, one of the most important, if not the most important company on the entire face of the earth who actually manufacture the chips, because people at NVIDIA are fabless. They don't have fabs. Like all of these organizations, they all know that this is a new industrial revolution, and that the picks and shovels and the stuff that is driving this new industrial revolution, including the electricity for it, by the way, so energy stocks. Yeah.
Another disclaimer.
All of this, yeah, not financial advice. All of this is legit, no bubble. Yeah, you'll see it go up and down because people don't like really large capex and loans and all of this kind of stuff. They don't like it. Like the markets don't love that, especially if interest rates were to not go lower. If they like ticked up by 5 basis points or whatever, like you might see then a little pullback, because people are like, oh, that's expensive then, because there's loads of loans in order to build out all this stuff and whatever. But it's downstream of there where there's potentially a bubble, because you have then tens of thousands of people building apps, and there's 100 granolas, and there's 100 GCAIs, and there's 100, what other apps are there? Image generation apps, although that you kind of need the model for that. I'm so in the legal sector, I can only think of legal apps. I don't want to name them all.
But I mean, yeah, you and me both.
There's 100 word plugin. There's 100 meeting transcription tools, and There's 100 AI calendar apps, and they're all getting funding because no one knows who's going to win. So the really fascinating thing in, let's say, the public markets, I mean, public markets are tough because, you're looking at the bigger companies typically who have gotten to a point to go public. But on the software side, you don't know who's going to win. Who do you know? How do you know who is going to best leverage AI and this incredible brand new intelligence? Dario Amadei referring to it as a nation of geniuses in a data center, it's a new form of intelligence, silicon intelligence. How the hell can you guess who's going to win apart from looking at what they've done so far? Apart from looking at Legora and Harvey and saying, well, they already have between them 250 plus 100, they already have 400 million in revenue between them. Therefore, I'm going to give you loads more money because the power law dictates that, one or two people are going to take the vast majority of all of the potential TAM. And Harvey and Legora already proven themselves out and building the brand, and they've got their case studies and everything else. So they'll probably win. So let's just kind of keep pumping money into them. That works. But the kind of structural shifts that we're seeing mean that even those traditional power laws of venture capital, I don't think necessarily hold up anymore, because you can have someone like Legora. Again, I do think it's now become a really good product. So I'm just picking them because they're doing well. You could have someone like Legora, and there's just a structural shift in work that means people just aren't going to buy a legal specific AI platform anymore, a legal intelligence platform, because their Anthropic subscription does that. And a lot of people on LinkedIn are saying, yeah, but that's not going to happen, because what matters in the legal intelligence platform are X, Y, Z. I'm like, but you don't know. You don't know how easy it will be for Anthropic to offer all of that. And you don't know the level to which the system of record or system of execution or data or whatever becomes more or less important. Maybe it's much more important that all of these systems and their data is all connected. And maybe it just becomes the standard thing to do, that you just all have an Anthropic subscription. Every department uses Anthropic legal, Anthropic finance. How do you know that won't happen? And if there's a chance that will happen, that gets priced in. And that's why we see some of these trends in the market. Is there a bubble? Yeah. And ultimately, the bubble that I am observing is a venture capital bubble, where most venture capital, probably more than we've ever seen in history, is going to go to naught. And what does that mean for venture capital? Can it survive? I have a take on that, and it's pretty straightforward. No, I don't see the venture capital model surviving in the age of AI, but it might adapt. It might do something different. But they seem to just want to pump loads of money into defense now anyway. So they're basically becoming like proxy warmongers.
I mean, I was going to ask a question about looking into your crystal ball. What, 12 months out, where are we on all this? And you've already answered that question in your last answer. No one can know. No one knows. What I will ask is something very specific, which is, do the Harveys, Legoras, GCAIs of the world become ripe acquisition targets for a foundation lab to buy up a market share ahead of their competitor?
Wow, that's a question.
Because they've got the money. They've got the cash.
Yeah, I mean, it depends where the value lies, really. I think if you look at someone like Legora with their brand and their distribution, yes. I mean, an incredibly expensive acquisition target, and one that the investors probably also wouldn't necessarily be excited about unless they really felt a high degree of uncertainty. I think there's a lot of conviction in someone like Legora right now. And they're on 3-year contracts. Let's not forget that. Like, you sell to a law firm, you sell on a 3-year contract. So for 3 years at least, they're going to have really big revenues. Are they going to grow quickly enough is the question. Can you grow from 100 million to 500 million in the next 2 years? It's the question. Are they ripe acquisition targets? I would say no. Let's put Legora and Harvey to one side. So what they've done in execution over the past 18, 24 months is kind of unprecedented in software history, near enough. So let's put them to one side. They're their own special case. They're gonna do something. They're going to do something. They're not going to naught. I would be absolutely astonished if either of them went to naught or even considered to have failed. I'd be pretty astonished.
There's something more macro seismic that would be more concerning if that were to happen. I agree. I think this be the least of our worries if Legora and Harvey went to zero.
That's my sense. But you name GCAI, they have amazing distribution, and I think they also have really high usage. And those I've spoken to who use GCAI, all of whom are very happy with GCAI, are leveraging GCAI kind of in lieu of being able to use ChatGPT or Anthropic for their work. And now, due to that, GCAI have been able to kind of improve their feature set sufficiently that now you would use GCAI in place of someone like ChatGPT because it just is
Mm.
more feature rich and more tailored for what you're trying to do. That does not mean it's not a relatively easy product to copy for someone like OpenAI. So
Mm.
don't think the value lies in the features. I think the value lies in their distribution and their go to market and their CEO. And if that's where the value lies, well, their distribution is not as good as Anthropic and ChatGPT and everyone else. So I wonder what happens to those legal intelligence platforms. I do. And yeah, we've not talked so much about Flank, obviously, throughout the course of the last half hour or so, but it needs to be a question, I believe. If I were to be I am thinking about this every single day. And if I were to be sitting in anyone's shoes, be it Celia or, or Scott or whoever the other founders are of any of these legal intelligence platforms, I would be taking the threat seriously and then thinking, how are we sticky? Where's our moat? What are our network effects and everything else? And they will be doing this. I'm not saying this is not advice for them. They'll be doing this for sure. They got where they got to for a reason. But I think I'd be coming up short with a very clear answer of what to do aside from be on the right side of the consolidation, ensure that our revenues are so high that we raise our series B and C and D. And then we're so big that that's a moat, isn't it? Just being really, really big. If you're a massive bloke in the playground, that's your defense against bullying. You don't need to read a book telling you how to handle someone calling you whatever names.
No one's gonna try it.
You're just a massive bloke. You can walk into the playground smelling a fish or whatever it is that you get made fun of for, and you're a massive guy. But it's interesting because I do think that is like the default. If I'm to think then of like conversations I've had with investors or posts I've seen from investors to this effect, those investors who are like a little bit more traditional and aren't necessarily thinking skate to the puck and do AI native law firm or do something like really think ahead to the new paradigm, that's a different kind of investor. That's the Andreessen style of investor. We're looking at the more traditional investors. I think what they would say and what I hear is sell the pants off what you've got, build your revenue, scale your product, kind of make hay while the sun shines, because that solves for a lot of uncertainty. And trying to solve for uncertainty with theoretical lab experiments, whatever, like doesn't get you very far unless you are making some big, bold bet and some crazy swing and you're really confident in what paradigm's coming and you feel that you can already deliver some of that value today. And I'm saying this just because I saw the article 2 days ago about YC bringing on 3 AI native law firms into their latest cohort, which is 1, kind of batshit crazy, and 2, also totally sane, because yeah, for sure, that's the paradigm. For sure that legal services are going to become exponentially better and or more affordable and or fairer, whatever. And therefore someone's got to build that. And how are you going to build it? Because the existing law firms are not going to. So you can extrapolate pretty easily there. But ultimately, to answer your question, I don't think we're going to see too many of those kinds of acquisitions, but it will be a feature of the consolidation. There'll be a handful. The way that we saw Windsurf, was it Windsurf? Get acquired. I think we'll see a few more things like that in each vertical. I don't think it's going to be like open season. If I'm Sam Altman, I'm not thinking, I need to buy Wordsmith,
No.
Yeah.
It's a convergence exercise, isn't it? Eventually, most core key vendors will all be providing the same capabilities across their platform with a few flourishes here or there. I saw it during my time working in cybersecurity. I saw that there were some very distinct and uniquely differentiated products that essentially over a 2 or 3 year period all converged to offer exactly the same thing. And then, to your earlier point, it's about brand, distribution, sales efficiency, and execution. These are like immediately pre or just post IPO cybersecurity firms from the mid kind of 2010s. So we've seen it before in the SaaS era. I'd be very surprised if it doesn't go somewhere like that, where yes, they remain separate entities and they're not gobbled up and they don't do a big merger and they don't do X, Y, Z. But instead it becomes a slightly bigger challenge for buyers to see the wood from the trees and to actually make a buying decision on the basis of being like, well, on paper, they look very, very similar. And I can't necessarily make that distinction. So I think it'll then come down to execution, sales efficiency, and obviously brand reputation. Word of mouth in particular for legal, of course, is going to be a huge thing. You only need to spend 5 minutes on the legal tech subreddit to know that there are a lot of skeptics out there and they do compare notes. So, it's always an interesting read, but I think that's the way it's likely to go.
And I think if you If you look at why in 2023 products were able to grow the way they were able to grow, why we had the kind of experimentation that we had from legal teams, and why word of mouth worked so well back then, there was this great potential of AI, but no one was really necessarily directly feeling it through the apps they're using every day. And that's changed. You can use Notion AI, Slack AI, you can use Microsoft Copilot. These things are only going to get better. This is the worst it's ever going to be. And we can say that every day. And you can use Granola, which is an AI native AI first tool, but you can use that and it enhances your experience on every other meeting app or product that you're using. So I have a question back to you, which is, before I pose that, because I need to give that background context, I suppose, which is to help you know what I'm really asking. And that is that we don't have, now that we're seeing that value every day, I wonder if that what worked to sell the product 1 or 2 years ago, what worked to market a legal product 1 to 2 years ago is still relevant. If you can, as a legal department, just sit back and get the value of AI coming to you through all of the tools you're using every day anyway, and through the 1 or 2 meaningful purchasing decisions your procurement team make company wide. But do you have that same impulse to have to join your AI group, educate yourself in AI, talk to someone? People start calling this AI fatigue. And it's not AI fatigue, AI fulfillment. So I'm not fatigued of AI. I'm not looking to buy AI. I get called and messaged every day about a new AI product. I have no interest. Not because I'm fatigued. I'm not fatigued at all. Give me more AI. But because I'm getting so much AI and it's working so well for me that I actually stop thinking, how do I get value from AI? How do I capitalize upon this technology? Because I'm like, yeah, I'm there. I'm getting a lot from the tech. But that is the kind of preface to my question, very direct to you, which is, what happens to Microsoft 365 in the enterprise in the next 2 years?
It's a really good question. I was there when 365 was kind of making its debut, as it were. I was at a company called Mimecast. We'd worked deploying email security, email continuity, perpetual email archiving, incidentally very popular with law firms, had a huge grounding in law firms because of the perpetual archiving. And there were a lot of folks who were very resistant to moving things like email, anything, any infrastructure to a cloud-based service. It obviously transpired that that was the only way that you were able to continue to function as a Microsoft house, is to use that service. I think it's a really interesting question about the next couple of years, because having worked with and been a customer of, let's say, finance teams, legal teams, etc., they're so set in their ways. They're so set in their ways. And I think it's going to take a gargantuan effort, particularly for those who are in the later stages of their career, i.e. closer to retirement, for them to uproot their ways of working. So, for example, good luck getting an accountant to stop using Excel for some of their more basic capabilities and more basic jobs that they need to do. They are not only of the belief, but in some cases may be correct, that there is nothing better for those certain jobs to be done than a spreadsheet. And for that, you're going to encounter all the same problems that every SaaS company, every technology company, every .com company encountered, which is you'll reach that chasm of, we're never going to, or we're going to have to work really, really, really hard to get people to give them reasons to believe and to give them as much evidence as possible that this is the way that things need to move forward. Now, Microsoft, rightly or wrongly, have this reputation of being the default for enterprises in terms of productivity suite. So the onus is very much more on the Coworks, the Frontiers of this world, to demonstrate that they can not only replicate, but drastically improve the quality of life. And agentic approaches obviously is something that will become part of that. But when you look at the assistive AI technology as it is today, a lot of people are, spurning that in their day-to-day work because they feel like it's too much effort versus just doing what they've always done. Even though objectively the outcome is better, faster, quicker, whatever, but it's their perception about the importance of these tools that they are used to that's going to be very hard to replace. Now, we obviously have a continuously refreshing workforce coming in, and I think they're going to be more kind of AI native in terms of their expectation and understanding about how tools and technologies work, simply because they've grown up around it. Yeah. But I think 365 is safe, but I think it's going to evolve and change shape. I think it's going to maybe leverage more kind of critical components of Frontier, let's say, into how the operating system works. Because you log into 365 now, you're presented with your personal dashboard and you've got your web apps and you can all do everything in a single browser. So people are already familiar with that concept, whether they like it or not. But it's a case of, can you replicate the very nuanced and very specific jobs that need to be done? And are you actually solving a problem that already exists by giving them a different way of doing it? And that is this root cause of why some people really struggle to sell their product, which is objectively fantastic from a technological point of view. Is the pain and the problem urgent enough? And is it something that they are willing and have thought about solving in the way that you are solving it? Because in many ways, you can solve a lot of problems. But if it's not exactly the same way, or at least very close to this utopia that your potential buyer has considered, then they're going to think that's too much of a cognitive leap, because that's not how I thought about solving it up until this point. So again, they take more convincing. It's a longer sales cycle. You basically have to spend more time bringing them to market, basically. And unless they have a very clearly defined problem, you're a perfect example. I'm exactly the same. I'm not fatigued by AI at all, but there aren't very many problems that I have in my day-to-day work that I desperately need to solve that makes me go, yes, actually, let's talk. And that's the key point. Like, I think I speak on behalf of product marketers everywhere. Product marketers understand this. More traditional generalist marketers and those in digital marketing, where the expectations are you have to go out and find leads and build pipeline and so on and so forth. Yes, you can influence people's perception and market the pain and the problem and so on. But fundamentally, if they don't yet have that problem, you can market and explain it and get that mind share as much as you want. Until they have that problem themselves and they feel it acutely enough that they're like, I have to go and solve this problem. That is the goal of good marketing, is that when they reach that point, say, I have to go and solve this problem, and I know exactly who I'm going to go to first, because they understand, they speak like me, and they have shown me a way in which I consider it the way that I would solve it if money were no object and time were no object for me to build my ideal solution. So long answer to basically saying, I think 365 evolves, but I think the uptake and the adoption of the products of that evolution will so heavily be contingent on whether or not they can replicate and improve the learned behavior and processes and jobs to be done for those specialist knowledge workers.
Yeah, and we see that one of the tools that Anthropic developed very recently and launched, I believe just when they launched Cowork, maybe earlier, was this very impressive plugin for Microsoft Excel that means I now, someone who has spent far too much time in Excel and yet am terrible at it. Terrible. I can't do anything. I can't make a pivot table, whatever. I can now use Excel like a pro, like a McKinsey pro, like an investment banker. And what's interesting there is that a way that Microsoft is staying relevant, Microsoft is super relevant. It's the backbone of the enterprise software ecosystem. And Satya is a world-class leader. But by inviting foundation model providers to be a plugin to that ecosystem, is saying, we're no threat, come here and we'll put your plugin here. You develop here. It's easy to build a plugin here. It's easy to build a plugin there. And I think by putting yourself kind of further upstream, then you're always relevant. And yet my final question, like walking question that we kind of leave with, I suppose, is what happens when models get so good that we do trust them end to end with projects and we begin to treat them like an external service? What's the ideal interface for that? Because I don't think that's an operating system. And if it's not an operating system, then whether Microsoft build it or whether OpenAI build it or whether someone else builds it becomes less relevant. And you're suddenly kind of opening up. It's like there's been a dictatorship for the last 30 years and suddenly you have a democratic vote again. And I think that's quite scary for Microsoft and Microsoft investors. And I think the release today, let's say last week, to make it seem more realistic, of OpenAI Frontier is a step in that direction. And for me, in closing, the last thing I really have to say is aside from AI alignment, which is going to be a critical topic in the coming 10 years, but one of the areas I'm watching most closely that I'm so excited about is how the interfaces to silicon-based intelligence shift from the traditional point-and-click SaaS paradigm to something else. Because I'm telling you, this laptop here that I've got and this phone that I've got, one thing I would bet is that they will change beyond our recognition and in a way that we cannot predict very quickly. Within the next 3 years, we will be operating entirely differently, or interfacing entirely differently with our silicon.
You're already starting to see some of that with this humanoid robot development and things like that. It's such an unusual future to consider. But then, if you don't mind me revealing our ages, Jake, you and I are very similar in age, and we've been around like probably one of the generation, the fortunate generation that lived both without access to the internet or high speed access to internet to the era that we're in now, and we built our careers in technology and working with technology. And so we've had a front row seat at all of these types of developments and evolutions.
Yeah.
For the first time in my life, my relatively short life to date, I have no idea what's going to happen next. I have no idea.
Agreed.
And that is both exciting and terrifying in equal measure. I don't think we have reason to be worried, but I think that there is an element of the unknown where, yes, we've sleptwalked and we've walked into the unknown. This feels like hurtling into the unknown of the next paradigm and the next kind of phase. I have 2 young kids. I have a 4-year-old and a 4-month-old. When they're my age, I have no idea what sort of interaction or relationship with technology they're going to have.
Yeah.
And I don't know how to manage that right now. So it's an interesting extra level of like consideration. But I think you're right. I think personal devices will go away. I think there'll be I hesitate to think we'll go potentially as far as, implants and everything else like that, but there'll certainly be, in a working context, maybe everything is predicated on speech. Maybe everything is predicated on speech and like querying and getting work done on the basis of explaining what you're trying to do and reasoning in real time with a model and all of that type of thing, because there's then this collective knowledge, not only for how you do your work and how you like to present your work and so on and so forth, the context that we see and the preferences we see in people's LLM usage now, but one that leverages the entirety of an organizational knowledge that has been cleaned and pruned of the irrelevant, like obtuse or just simply unuseful information and data points that is currently plaguing a lot of deployments now. Because when anything on a RAG sort of system, is the outputs are only going to be as good as the information that it is basing its response from. Right. So there's obviously things that organizations can do to improve that. I think once we get to a point that in a work context, the AI knows what is out of date and what is not to be referenced purely because of its age, quality, authorship, whatever it might be, or provenance, that's when things start to get really, really interesting. And I think the next big thing will be the full kind of explainability. And the things that will set people apart is the explainability of how something has arrived at its decision, like to the minutiae and the metadata, because that then obviously gives people the confidence that there is a reasonable audit trail and an element of control that they have. And if they see something, and it could be a handful of supervisors within an organization looking at a very specific part of the org, to basically say, well, that wasn't quite right. It was 99% close, but it wasn't quite right from what we would expect. And let's go and investigate why. And there'll be a whole batch of people whose job it is to basically focus on weeding those intricacies out so that it gets to the perfect kind of utopia that they're looking for. It's going to be interesting whatever happens. I think that's fair to say. Okay. Jake, thank you very much for your time. Really appreciate it. And yeah, we'll do this again soon.
Cheers.
Thanks.